Hello guys, so in this video we are talking about what are the fundamental trading terminologies like trading orders and bid and ask price and all other stuffs. But before moving into this section, let me clear you one very important thing, which is in the trading view. So you are not only getting this whole course, but you are also getting source code. After completing this course, you are going to get this source code of one specific strategy which is available on TradingView. Let me give you exact example of this strategy, and then you are also going to get expert advisors like HFT expert advisors and one more expert advisor which are going to be very helpful, and also you will get that expert advisor which we are going to make in this whole course. Okay, so previously all our analysis, all our terminologies goes very well, but keep in mind that this code, pine script code, and also that expert advisor will need human interventions. What is a human interventions? Means you will continuously monitor that and you will continuously adjust it according to the technical analysis. So if you are expert in technical analysis and if you are following our streams, you can easily get a one specific direction. After getting some specific direction, you can only take trades according to that. So that strategy which is available in the pine script, that can be automated and that can also be applied for the manual trading. So both option is available for you. Okay, so now let me go through it and let's apply it. Actually it's a personal and it's available here, like I have just given it a random name. So first of all I will move toward its results and which type of results we are getting in the trading view, and then this whole strategy code will be provided to you after completing this course. Okay, so first of all this only works with some specific settings, like we will go into the settings and I will write here 3 and ATR period will be 2. So this can be easily automated with 3 commas. This can be easily automated with any exchange, so you don't need to worry about anything. How that will work? Here we will click on Haikanashi, and how that will be work, we will need to place webhook URLs in this trading view, and then whenever you will get buy signal, whenever you will get sell signal, it will send a URL, webhook URL to your exchange, and it does not matter you are applying it on the crypto or you are applying it on the forex. Okay, this is for the automation purposes. Those all things will be clear in our next video, so you don't need to worry about anything. Okay, so here if you see, then our profit factor is 4.0, which is super amazing, and we can easily automate this strategy without any human intervention. Okay, so now let's move toward our 15 minute of this gold and let's see whatever this strategy is going to work or not. So here if you see, you got sell signal, and here market goes down. Here again you will get sell signal, market goes down. Here you got buy signal and market suddenly moves upside. Okay, so now let's move toward here and let's see what type of profit factor we are getting. So we are also getting 4.70 here, and let's go to list of trades. Here all those trades were taken and profit and loss is also provided. Okay, so this much profit was made and this was the maximum equity, and profitable trades was 60%, mean we have 60% win ratio, and profit factor is 4.70, and we are getting very good risk to reward ratio. So if you work on 1:3 risk to reward ratio with this strategy in the manual, then you are going to be profitable. Okay, so if you have a little bit knowledge of structure and if you have a little bit knowledge of price action, and if you combine it with this strategy for the manual trading, this can also be proved to be great thing. Okay, now let's move toward our other pairs like GBP, USD, and other pairs. Don't need to worry about anything. This will work on Haikanashi, and you can easily automate it. You can easily do manual trading, and all these type of codes will be provided in this course. So that's why this course is recommended. So here we are getting 56% profitable trades, and profit factor is of course 4.49, which is great. And if you wanted to analyze risk performance, you can easily go here, and all those list of trades will be provided. So by tweaking its settings, that how much maximum it should enter with one specific trade, you can easily adjust it. Okay, so adjusting that, you click on their settings, and here initial capital and order size you can write here 5,000. so in this way it can be easily determined. Here you can see that we are getting $1,000 profit with this profitable trades, 56%. And here if we go into the 5-minute, but 5-minute of course high noise will be there and your profit will be decreased. Okay, so if you combine it with these signals with the price action, or if you combine it these signals with this moving average which is SMA, so you can easily build good trades. Like you can easily build a strong strategy around it. If you are familiar with the candlestick patterns, you can work on candlestick patterns, and whenever these signals will appear, so we will tell you that which type of things you should go with and which type of scenarios you should do with that. Okay, so hope this little concept is well clear. Now another thing will be provided to you which is expert advisor, and that expert advisor will be HFT expert advisor, that is 100% free, available with this. And one more expert advisor which will created by in this whole course, that will be provided to you. So keep in mind that it does not matter you are forex trader, you are crypto trader, or you are new trader, old trader. This course is for all type of people. Okay, all type of people can easily join it, so that's why must go with it. Now let's move toward our video, that which type of let's see which type of thing we are getting in this first video of this section. So basically in this video we are just analyzing basic things like orders and understanding bid and ask price, because when you will go with creating a spy advisor, these things are very necessary. And when you will create a bot, of course each bot can have different strategies, so you must understand market order, limit order. Is whatever your bot is going with limit order, whatever your bot is going to with the market order. I have seen range bots, like they will mark a range and here buy order and here sell stop and buy stop. They are just play, so whenever market will break in one specific direction, order will be executed. So that is considered as a stop order. And limit order is simply, for example, if market is here, if you wanted to put a buy order, you will put here buy limit. If you wanted to sell order, you can put here sell limit. But if you wanted to go buy at this point, you will put a buy stop. If you wanted to go sell down when market cross this, you can put here sell stop. Okay, so difference between these tools are understanding these tools are very necessary. And then understanding bid and ask prices. What is bid price? The highest price a buyer is willing to pay for an asset. So if more buyers are there and if price is going up, candles are forming and buyers are still ready to pay more for buying that specific asset, then market will continuously go upside. Ask price is simply lowest price a seller is willing to accept for an asset, and again if more sellers are coming, the more market will go down. Bid ask spread is the difference between bid price and ask price, indicating market liquidity. So understanding these are very necessary. How and why? Because due to these spread conditions, one successful strategy can also be go into the losing strategy. Why? For example, if your strategy is highly effective in the demo, but if it does not work in live, that's because of the spread. Why? Because for example, if you place order here, but that order will be placed at this point. If there is a sell order here, that order will be placed here. Between those gaps there is spread provided by the brokers. So that's why your account should be like with very narrow spread or very low spread. Because if your strategy is like buying here and selling here, for example selling here or buying here. So if you calculated your strategy and your strategy was successful between these 2 points, but if your order is placing at this point and you will exit at this point, of course your risk to reward ratio will be disturbed and you can easily lose. Okay, so that's why understanding this bid price is very necessary, and spread should be very low whichever broker you are using. Each broker will have different accounts, different type of swaps, so you can easily go with that. Market liquidity, you are familiar that how much money is available for buying and selling any asset. So high liquidity means that low spreads. Spread I already explained. So execution types, for example, there is market execution, instant execution, and pending orders execution. So that is same that how market order, when you will put market execution, then order will be placed, and it does not matter what is price, it will be sale whatever its price is going speedily downside or upside, it will be sold. And instant execution is orders are executed at the exact price requested. If unavailable, the trade may be rejected. Okay, so I will recommend going with market execution, if your strategy allows that. And then market order execution, limit and stop orders go triggered once price reaches a certain level. So hope now you are well familiar with all these things, and you have decided to go with this course. If you're not, then must go with it, because people usually charge thousands of dollars for their expert advisors. People usually charge thousands of dollars for their working methods, but I am not charging anything for those working algorithms or for those working Pine script codes, and I am just absolutely giving it free. So which type of strategy we will follow with this? We will use, if you are doing manual, then we will use this 50 moving average and this code, and whenever market shows this selling, and whenever market touch this line, we will place a sell order, and above it here we will just place our stop loss. So this is simple example, but we will continuously improve it by following higher time frames. Oh, you can combine higher time frames. For example, if there is bullish trend or if there is buy in the 1 hour and 4 hour, then we will ignore those sell signals and we will always follow the buy signals. That's how a human intervention came in. Like if your bot is both sided running, but if you see that 1 hour and 4 hour are only buy side and they are in buy conditions, then you can stop your sell bot and you can only enable your buy bot. Same scenario is then 1 hour and 4 hour in the sell side, so you can stop buy bot and you can enable sell bot. In this way, by tweaking little bit those things, you can easily become profitable. But keep in mind that we will always go each trade with strict SL. Like we will always use our SL 20 pips or 30 pips, and our target will be 20, 60 pips or 70 pips. So we will try to build those type of expert advisors. There are thousands of expert advisors available in MQL5 market and a lot of other expert advisors, but most of time they are martingale, or their risk to reward ratio is very bad. They will just book 30 pips profit, and they will have a stop loss of 300 pips. So that's why those things are not recommended, and going with solid things, solid risk to reward ratios are highly recommended. In this video, we are talking about understanding market structure, how exchanges work, order books, and the role of market makers. So going with this course, you don't need to get any coding knowledge. You don't need to understand Python and C++ and all other stuffs. You don't need to train any neural networks. And if I talk about their actual reality, so they are just for marketing purposes, like ChatGPT and AI and all other stuff. So those things are just for marketing, and most of the time they don't have any relation with actual working of that expert advisors. Okay, so we are always exploring no core platforms where from beginner level to advanced level trader, each person can easily interact with it. Each person can easily make its own expert advisors according to its strategy, and just drag and drop things should be there. And any person, because I have given thousands of strategies in all my courses, so if any person can wanted to apply his own strategy for automation purposes, then any person can easily do that. Okay, so now let's get started. First of all is how exchanges work. So this first section and second section, these two sections are only for introduction purposes, and if you are expert advisors and if you are old in this trading field, then you can easily go into our third section. But if you are beginner, you should follow this. How exchange work? Usually exchanges is marketplace where traders, investors buy and sell assets such as stocks, forex and all those stuffs. There are multiple exchanges. First one is centralized like Binance and other stuffs, and decentralized. Usually we will work with centralized exchanges like Binance and Coinbase, and then those type of brokers. If we talk about forex, and then brokers with XNX and all other stuff. So I usually use XNX. And then about the counter, OTC markets like trades happen directly between buyers and sellers without a decentralized exchange. And these are for the decentralized, but I don't recommend that because those are not best for automations. Order books are simply all the orders placing and all the stuff. So these are not pretty much related to our bots and expert advisors. So main important is market structure. Okay, so what is market structure, what is breakup structure, and what is chalk and all other stuff. So you don't need it to go and buy whole courses. You just needed a simple strategy. Let me go through our trading view and let me explain it. Let's close this, and if I write, let me check if we can find some good indicators related to market structure. Market structure is usually formed with the lower lows, lower highs, higher lows, higher highs, and then breakup structure, chalk, etc. This looks good. Let me check if it is available or not. Let's shift to again charts, and here this chalk thing will be available. So here breakup structure and here chalk. So understanding these things are very necessary. If chalk has happened in the higher time frames, which means that market is going to go downside, so you should always look for downside signals. And if there is chalk, means that upside is going to be break, so you should always go with the buy side entries. Okay, here if you see, then I have taken this buy side entry and I have placed this SL because SL is very necessary. And why I took this trade, because there was very major support level, and also we have got very good rejection with this candle, so that's why I took up one buy side. And here if you see, chalk is already happened, so we will see that what will happen, but understanding this market structure is very necessary. So what is happening here, market is forming lower lows and lower highs. This low is higher than this low, and this low is higher than this low, and this low is lower than this low, and this low is higher than this previous low. So this is how market structure works. Same scenario is when market will go up, then it will break this previous level and then goes upside, that will be considered as a choke. If choke had happened, which means that market is going up, and if breakup structure has happened, which means that market is going down. So you don't actually need a indicator for this purposes. You can easily just analyze these things by watching all other stuffs. So you don't need to go with each and everything, but understanding these market structures thing is very necessary, and this is the basic of technical analysis. And for making any strategy into expert advisors, technical analysis is very necessary. Okay, so of this little thing you have got, and now we will try to move into our next video, and let's see what we have next.